Welcome, welcome, welcome. Thank you for joining us today. We will be discussing our confirming entry and how to get the best and most reliable confirmation using these candlestick patterns. Now, we aren't going to be discussing any real technical analysis, but some terms you may have heard of already, such as stop hunting or railroad tracks or evening star or morning star formations. If you're not currently sure what stop hunting is when the market spikes up in one direction to eliminate the stop losses. For example, in this example, if there are sellers in this area that most likely have their stop losses in this area, price will spike up. A bright breakout of consolidation will happen, confirming to retail traders that trade breakouts that price is going long and that they should buy, while at the same time spiking up into where the stop losses most likely are of the sellers in this area. Then, right after taking out the sellers and confirming to the buyers that it's a buy, that is when price reverses. And you can see the same thing happen at that same area. That is because, let's say the buyers here that bought this breakout right here, there's buyers trapped in this area, right? There are now buyers trapped liquidity in this zone. So the dealer must spike into this zone to create the illusion of a breakout once again, but cannot spike past or stay in this zone for a very long time in here, because there is trapped liquidity of buyers that want to get out at break even and are waiting for that next spike up to get out at break even. So the dealer spends very little time in this area and then comes down right after taking out the stop losses with that wick one more time, just like we saw right here. So your confirming entry on these two possible sell areas or opportunities would be that stop hunt to the high and this stop hunt to the high. That wick, the wick that closed below the current or the previous high. So here is an example of an M formation, and these don't, these confirming entries don't have to be M or W reversal patterns. They don't have to be, let's say you see a spike like this. Well, that's kind of a bad example. All right, let's say okay, here is what I'm talking about. This isn't really an M formation here. I mean, you could maybe call this an M, but Here we can definitely see an M. You can see our confirming entry. We have that high that was hit, right? Or I should say the high of the day was formed right here. Then what happens? There's that wick to hit and break past the high of the day. Plus the spread of the broker traps buyers in this area and hits the stops of people that have their stop losses in this area. So there's a reason why these candlesticks form. But what I'm trying to get at is it doesn't have to form, or it doesn't have to happen at a M or W second leg. For example, here was a spike. We see that M formation, and then we see that, what looks like a continuation of that downtrend. So we can say, we may have another chance to get in, to get an entry on this sell position once we see a stop hunt to the high. Now, you could have taken this as a stop hunt to the high, this as a stop hunt to the high, or if you were extremely patient and selective, you could have waited a bit longer and taken this stop hunt. These are all within a general area that you could have taken easily with less than a 25 pip stop loss. You could have placed your stop loss at the high of the day, remember, or this newly created high. This is a 15 pip stop loss for your confirming entry is this spike to the high, right? Or I should say this spike, this stop hunt. You could have entered in this zone and then wrote it down until you see more spikes to a low, or to the low of the next day, or a confirming entry, a W, reversal pattern, whatever you want. But this was a 15 pip stop loss for a 53 plus pip reward trade, right? Here's another example of that same thing. It wasn't an M formation, but you can tell that this is a big stop hunt right here. They're spiking up, inducing traders long, spike up one more time, induce as many traders long as possible right before trapping and dumping the price, right? So our next topic, I guess you could say, our next confirming entry is we just went over these stars, so our next one will be, we just went over the wicks, so our next one will be these stars. The star formation. Here we can see the US dollar, JPY, created that high right here, and then traded off the high, spiking into that high with all these wicks, right? All these different wicks. They're inducing traders long, and at the same time trapping traders or liquidity in this area. What could have been our confirming entry? This is what I call a star formation. This, in technical analysis, it's called like a morning star or evening star, something like that. There's also the inverted one, a star. That would mean you're going long, but we can see the high was created here, and there was this spike right to the high, right? That's a stop hunt to the high. Right after that stop hunt to the high, the dealer sat up at that high, inducing buyers for 15 minutes. And this was also helping confirm to the buyers that they were in the right position. Right after spiking down in one candle and completely shifting out of the zone up here to a zone here and then down. And then all the trapped liquidity that was in here has now been completely drowned out by the dealer. So that was an example of a star formation. Some of them look better. I'll try and find a better looking one. Here's a somewhat good example. This isn't really an M formation though, but you can see sometimes there will be two stars where the dealer waits up there for 30 minutes, giving the impression that it's still a buy, and then spikes down. Here, once again, that stop hunt to the high, and then we can see the star formation did not go above that high. The star can close above the high. The star can close above the high as long as it is a star. So the candle can close above the high. For example, this candle right here closed above our high of the day, but the next candlestick, and this is on the 15-minute chart, the next candlestick is a star formation, and that is our confirming entry. This also works on every other chart, you guys, on every other time frame, I should say, and on every pair, on every currency pair you want to look at. So here, once again, we can see that stop hunt to the high. Here was the high of the day was created here. And then we can see price came up, tested the high, and then spiked above the high once more. We can see that candle formation, and then one more candle, and all these are spiking above the high of the day. And then we have that reversal of hundreds of pips, or maybe a very nice reversal. Yeah, about 75 pips. But on larger time frames, you can have hundreds and hundreds of pip reversals. So here is once again a stop hunt, or I should say the high of the day, or high of the week or month maybe, on USD/JPY. We can see that spike to the high. There's that little star formation, and then a few more little stars, and then we can see that shift out of the zone, and then complete drop after that. That was this one definitely is a few hundred pips from the top. Yeah, there was a 400 pip drop. So that's just an example. Oh my gosh, my trackpad isn't working. Okay. just an example of the possibilities with these trades. So the next one is railroad track formation. Here we can see a W, right? Here's the low of that W formation. This is on a 4-hour chart. The low right here, and then this is considered railroad tracks. When it looks like there is a set of railroad tracks, one rail here and one rail there. It's where the dealer spikes to the low and then closes under that low, but the next candle can do whatever it wants as long as it closes above this candle or above the low that was previously created. So that would be a confirming entry as well. You could have taken it right here as a buy on a 4-hour chart with a stop loss below the newly created low. So right down here, that's about a 75 pip stop loss. Would have been 26 pips of drawdown with a 200 plus pip reward. Actually, about a 330 pip reward. Let's look for some more railroad tracks. Here we can see some more. There's that W formation, second leg railroad tracks. Once again here, W formation, second leg railroad tracks. You'll see that this spike down will close below or right at the previous low. And then the next 4-hour candle, this candle is the trap candle. The next 4-hour candle will shift completely out of this zone. And then the next 4-hour candle after that will be the hop to the next zone. That was a 250, 350 pip rise until the next stop hunt to the high, and then that small railroad track formation or star pattern formed right there and then dropped once more. So you can see this happen, you guys, a lot. This is really useful when trying to confirm your entry. We can see once again right here. Here we have a bunch of different forms. We have the wicks that are rejecting this area. We know that these wicks are like little arms. Imagine the dealer has little stubby arms and he's grabbing into this zone really quickly. Just quickly grabbing and coming down. Quickly grabbing and coming down. Quickly grab, come down. Let's grab one more time really quick and then come down. All the grabs are grabs for liquidity. All the wicks you see like this. You can see a wick here and also a star formation right here. Inside this whole formation or this chunk is, on a smaller time frame, a very nice M formation, second leg star confirming entry. That is a 280 pip drop in one day to to the next little star formation right there. Or you may have gotten out right here at this star formation, which is okay as well. But you could see that there is obviously a massive amount of liquidity now trapped in here because the dealer spent so much time in this area, about 20 days in this area consolidating in this zone. He now has to hop to the next zone. So we could have stayed in for the long run 500 plus pips or so. Here again, I believe this may have been the elections, presidential elections, maybe. Maybe not. Actually, I think so. We can see that railroad track formation. There's that gap right here, the railroad track, that one spike, one candle to spike to the low. This is the trapping candle, remember? And then that next candle to shift out of that zone right in here. Then remember, the next candle hops to the next zone. Hop, 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 all the way up 1,500 plus pips. And you could have very well could have guessed or determined that the price was going to go up a very, very large amount because of the sheer volatility that happened in this stop hunt. This was a 321 pip spike to the downside. It was a 321 pip fake out. There's a massive amount of liquidity in this zone. So what did the dealer have to do? Not only in this zone, but as well as this entire zone right here. So what did the dealer have to do? Completely shift the zone on the retail traders that were selling in this area, that sold just because of this spike to the low. So that's really all I have today on the confirming entry. These happen, like I said, on basically every time frame. If you enjoyed the video, please give it a like, thumbs up, share it, subscribe, whatever you have to do to show some appreciation. Check out forexcommunity.online, a massive group of Forex traders from all around the globe, all around the world, just basically coming together, sharing analysis, sharing knowledge. I'm in the group. If you need any help, have any questions, feel free to contact me as well. Forexalerts.online is our news group or our main channel. Both of these links will direct you to our Telegram group. So thank you guys for joining us once again. Peace out.